Have you ever wondered if you're being manipulated in the markets? Well, today I'm going to show you how. If you watched my yesterday's video, I gave you an explanation why I was bullish on this candle and why we want to see rejection after yesterday. So I actually hid my drawing, so it's not so complicated. It looks pretty simple. But I'm going to enable my drawings here in a second, right here. So if you remember from yesterday, I actually had a couple drawings here. Yeah. So we have the daily fair value gap, and then we have the daily candle high right here. One of the daily candle highs. So as you can see, that market perfectly respecting this daily fair value gap from the 4-hour, perfectly respecting the 50% mark. Now, if we go here, I didn't trade today, just because I didn't know exactly where it was gonna go. Just because we were here and there was still, as soon as it was so bullish, I was like, I had still potential that it was going to go up higher. I just didn't know where. So, if we look at this here, so let's see here. We have the Asia session, London session, and then we have the New York here. So we see Asia session here, made a high here, made a low right there, and then London session just accumulated here. So if we go a smaller time frame here, 15-minute, so a high right here, a low right here, and then London session just accumulated. As you can see, my line right here, this blue line, we have pretty much equal highs right here. So what New York did was it manipulated those highs, right? So we have accumulation right here. We have manipulation, which took out these highs, respecting this, I think 1-hour fair value gap. Yep, 1-hour fair value gap right there. Tapped into it and just dumped. Right? So if we go on the daily, just like I said, right here, respecting this daily fair value gap right there. I do realize that once I watched the video and posted it that you couldn't really see the gray shaded area, but now I changed it back now so you'll be able to see it now. So yeah, if you look at this, we have what's it called? Asia, London, and then New York session manipulates and at the same time distributes. So looking at this, we're at lunchtime right now, a little bit past lunch now. We're just accumulating again. So we probably want to see a manipulation back to the upside, and then somewhere around tomorrow's Wednesday, right? The 8th. Tomorrow's Wednesday, the 8th. So then we want to see it come back up. So if we pull up a fib here, what we would like to see is a retrace overnight back up to this area, this little area right here. Perfect fair value gap in the zone. It'll be a perfect entry right there. We want to enter here, set our stop losses up here, and come farther down to target this gray area. And maybe this area, I would probably take off all my positions at this gray area and target this with a runner or two. So yeah, the reason why I would say we're going bearish, right? As you saw, we're respecting that daily fair value gap. We perfectly retraced back, manipulated these highs, respected this fair value gap, this hour fair value gap, and then we dumped. So this significant move is a market structure shift. Some people call it a market structure shift or break of structure. So just because we have a swing low here, and then we have another swing low here. So this is basic resting liquidity. People that actually bought and moved their stop losses just below these lows, even these ones right here, all got stopped out just because we respected this daily fair value gap and we are in a downtrend long term. If we're looking at the bigger picture, right? The daily, as you can see, we made a high, made a higher, lower high, made another lower high respecting this daily fair value gap. So we want to see this come down, probably to at least, definitely to the gray shaded area. Yeah, and then I'm gonna be honest, I'm not sure if it's gonna go any lower. So if you go on the daily fair value or the daily here, um, I don't know if the markets are actually gonna go lower. like I said, I would definitely take off all my position here by the gray shaded area, because if we do right, if we do the fib right here, we're gonna go up here. It's perfectly right on that gray shaded area. That black line perfectly lines up on this order block here. I think of the 4-hour order block right here, because those are down candles, which creates a low, which creates these this order block right here perfectly on the upside trade if you want to trade to the upside. So that's why I say you want to jump out by this if we see a retrace back up tomorrow. But if we do respect this area, we want to see the markets break above this high to be bullish. So as far as I'm looking at this, I would stay bearish no matter what. Even though if it gets to here, my mind is to stay bearish, because a lot of the times, see, so it's bearish here, right? It goes down here, up, down, up, and then down. A lot of times people are like, oh yeah, market structure shift. Let's just buy right here. It's perfect. Yes, it looks perfect, but not just because it's perfect doesn't mean it's gonna work. So I would probably sit back, relax, and see what happens, what plays out first, and then based off of that, I want to trade off what I see. But depending on what plays out tomorrow, maybe overnight it'll just come down to here, and then tomorrow we might see something, maybe go higher or maybe go lower, depending on what markets make here. But that's today's move. It's super simple, not that hard, not that complicated. If we compare it to yesterday, I actually didn't even get a chance to take a look at this. So we have a high here, right? Okay, came down low yesterday, accumulated here, manipulated, and then downside. Went to the downside. I mean, it was very choppy today. But overall, all three US 30, Nasdaq, and S&P 500, they all had the same move. There was no SMT to the upside. There was surprisingly no SMT to the downside. I didn't really see anything, but basically here you see that we took out the highs here. This would be considered a liquidity void, just because we don't see anything to any green candles here. It's just one shot of red candles all the way down. So it was market went from here. Let's see here, look at that, perfectly tapping the 62% level. So let me say, hold on, let me change this so you can actually see what it actually is. Okay, so you have equal. This is the equal range. This is the equilibrium. Basically, this is the 50% between here, and then OTE, optimal trade entries, right here. So we have the 62%, and then I think 79% right here. And then you want to typically set your stop loss here, but either you can enter in 62%, 79%, or the OTE. Preferably you want to set your entry at OTE, but if you want to be safe and sorry and not miss the move, set your trade at the 62% level, and don't risk as much, and set your stop loss up here. So then you're not losing out as much, you're not risking a lot more than you should. Then you're still playing out and then playing with the rules. But as you can see, yeah, it's coming down. So there's a chance that we might see like this afternoon session actually come down to this level. So I don't know if you have take the time to take a look at it, maybe like around 5 or 6 p.m. Usually markets are closed by then and they consolidate. Look at these levels, 62, 79% level. The chances are that it's going to either consolidate here, here, or right here. So we'll see what happens. Usually if it comes down this level, we want to look out for SMT. It will tell us depending on what market does, we'll be able to see an SMT. If we see an SMT, it'll tell us where it's going to go. So as you can see, almost in the area, we see the constellation here. So we go on the higher time frame right here. Look at that, with an order block right here. So let's mark that out here real quick. Like, you want to keep an eye out right here. So I would maybe be bullish tomorrow if it comes down here, consolidates, just to be able to take profits at this low right here. But I am not confident enough that it's actually going to go high above these highs, just because we're in a bearish trend. But because we went up higher here, and then we exploded past this high. We passed up this high. Basically a very exponential move above higher highs. So this is kind of like a break in structure here, but in the long term we want to look at this as a bearish trend market. So we don't want to actually buy. We want to be looking for sells. If you're looking to trade maybe on the 4-hour time frame or the 1-hour time frame, but since I like trading on the 15-minute, 5-minute, and the 1-minute. It's a lot less, it's a lot different, because let's say I was bullish yesterday, right, and then today I was bearish. So it changes when you're looking at a smaller time frame. But if you're looking at this as a like 4-hour, 1-hour, or like a daily, you want to be bearish. You want to sell at the high, and then because we made a high right here, swing high, and then we came back down. So hopefully we come clear out these lows. But if you look at a long term, like daily right here, we have higher highs, higher lows, higher highs, higher lows. So we're in a bullish uptrend right now. But actually, let's check something real quick. What if we went from down here? Maybe if you go down here, it might run those highs and then potentially like boost up higher. Oh, look at that. Oh, they didn't even see that. That's crazy. Oh my goodness. Okay, you see that? Perfectly came down, respecting this 62% level, and then it came down again, perfectly tapping the OTE. So actually, you might see this go higher. We might come and take out these highs in the maybe this week and next week. But wow, look at that. Isn't this manipulation or not, dude? This is like perfect entry if you really like, if you're looking at the 4-hour. So, I mean, yes, you might be down today, but tomorrow you might see higher highs. But we'll see. Because we did take out low here. We did take out the low here. Made a low, higher high, and then we made a lower low, taking out liquidity here. And then made a market structure shift here to the upside. Then we sold off. We're basically retracing back down. If we want to retrace to here, because that is the OTE level. The 62, 79% OTE level, and then maybe we might explode up higher. If this is not manipulation, I don't know what is. For the people that know what I'm talking about, yeah, this is nuts. People think, oh yeah, it's all gambling. No, this is not gambling, dude. Look at this. Like I just drew up a Fibonacci tool, and how does that? How do you not believe this is manipulation? This is manipulation, like at its finest, dude. And people are like, it's gambling. You're gambling your money away. I don't see this as gambling. Like, it perfectly hit this level. Like, this little line here that I drew out. Oh, unbelievable. But we'll see what happens. Don't take my word for it, but this is what I'm looking at. You see it as I do. But, yeah, so I'm going to actually write this out. Yeah, there'll be a swing high, probably daily swing high. But if you enjoy this video, if you want to see more videos like this explaining the days, the trades that I would have taken, and me explaining why it moved in a certain way, don't be afraid to give me a follow. There's gonna be definitely a lot more videos. Hope you see you around, and you guys have a wonderful evening. Take care.